lecture. Here I'll be talking about the concept of revaluation. Now the name itself, revaluation, simply means revaluing the value of assets and liabilities on the change of partnership. Now it is a very common thing to happen that whenever a partner is admitted, there is a change in the partnership deed, and whenever there is a change in partnership deed, the assets and liabilities are generally revalued. Red and blue are partners in the firm sharing profits and losses in 5:3. Green was admitted for 1/10 share of future profit. Green brought in 1,20,000. The balance sheet of the firm as at 31st March 2020 on the date of admission stood as follows. Now there is a balance sheet you can see, and we have the liability side where the capital of red and blue, the old partners, are 1,60,000 and 1,40,000 respectively. The value of creditors is 35,000. The value of bills payable is 15,000. So that gives us a total of 3,50,000. Now if we move on to the asset sides, we have land and building 1,50,000, plant and machinery 80,000, furniture 30,000, stock 45,000, debtors 25,000, cash at bank 20,000, so the total is 3,50,000. Now on the admission of Green, who has come in for 1/10 share, the following revaluations were agreed upon. Number 1, appreciate land and building by 30,000. Depreciate plant and machinery by 10%. A debtor of 3,000 proved bad. Creditors and bills payable were revalued to 32,000 and 17,000 respectively. So it can be clearly seen that the value of creditors is going down and the value of bills payable is going up. And we are asked to prepare the revaluation account, partners capital account, and the balance sheet of the new firm. The date of the balance sheet will always also be the date at which it is prepared, because the admission took place in the same date. And over here Green has come in for 1/10 share, but that is of no use. Why? Because there is no goodwill given, and when there is no goodwill given, the question of calculating sacrificing ratio does not arise. After reading this question, we have come to know that there are two partners, red and blue, with a PSR of 5:3. They have taken Green as the new partner who has come in for 1/10 share, and he has brought in a capital of 1,20,000. But over here, what share he has come in will be of no use because he has not brought in any goodwill, and if he is not brought in any goodwill, the question of calculating sacrificing ratio does not arise. If you read the question very carefully, the question has asked us to prepare the revaluation account, capital account, and the balance sheet, and we know when we prepare revaluation account, we prepare revaluation account when there is a change in the partnership. Now over here you can see there is an admission and the partners have agreed upon revaluation of certain assets and liabilities. So let us get started with the revaluation account and let us see what are the revaluations. So first we'll start with the revaluation account. Revaluation account, and the first revaluation, if you read it very carefully, it is given that land and building has been appreciated by 30,000. That means the value has increased, and whenever the value of asset increases, it will be going to the credit side of the revaluation account. So we'll post it in the credit side by land and building, and the amount is 30,000. The next information is given to us, depreciate plant and machinery by 10%. So what is the value of plant and machinery given in the question? It is given as 80,000. 80,000, 10% of that is 8,000. So it will come to the debit side because depreciation means reduction in the value, and if there is a reduction in the value of assets, it will be coming to the debit side of the revaluation account. So in the debit side we will write to plant and machinery, and the value of that is 8,000. Now the third revaluation which is being told is a debtor of 3,000 has proved bad. That means there is a debtor worth 3000 which is bad. That means the value of debtors has gone down by 3000. So we'll go to the debit side and we write to debtors and the value is 3000. The next piece of information which we have is creditors and bills payable both have been revalued. See very carefully over here, the value of creditors has gone down from 35,000 to 32,000. So there is a decrease of 3,000, and we know when there is a decrease in the liabilities, it will go to the credit side of the revaluation account. So we'll write in the credit side by creditors and the value is 3000 because it has gone down from 35,000 to 32,000. And we can also see the value of bills payable has increased from 15,000 to 17,000. It has increased by 2,000, and therefore since there is an increase in the value of liability, it will be going to the debit side of the revaluation account. So to bills payable and the value has increased by 2000. So these five were the revaluations. Now after we prepare the revaluation account, we will compare the debit side and the credit side and will find the result of the revaluation. Over here you can see the total is coming to 33,000 and we will have a profit. So to profit transfer, and we have over here, you can see the profit 33,000 minus 13,000 gives us a profit of 20,000. Now this 20,000 will be divided among the two partners, red and blue, in their profit sharing ratio, which is 5:3. So if we divide 20,000 by 8 and multiply it by 5, we get a value of 12,500 for red and we get a value of 7,500 for blue. How did we get this? If we divide 20,000 by 8, we get 2,500, multiplied by 5, we get 12,500, multiplied by 3, we get 7,500. Therefore, profit transfer, we have over here red's capital and we obviously have blue's capital because the new partner is green and the new partner will not get any benefit of the revaluation. Always remember that whenever a new partner comes in, the revaluation is done so that it has been distributed. The profit or the loss on revaluation is distributed among the partners. Why? Because if there is a profit on revaluation, the old partners will not want to distribute the profit with the new partner, and if there is a loss, the new partner would not want to take up the loss from the firm. After preparing the revaluation account and getting the result of the revaluation, which ended up as a profit of 20,000, and distributing the profit among the partners in the said ratio, we'll move on to the next part of the sum, which is the preparation of the capital account, and then we'll prepare the balance sheet. Here the capital account is very simple because it will only have two entries. One is the entry for the devaluation profit and the next one is the capital brought in by the new partner green. We already have the balances given to us of the old partners red and blue. So we'll start with the capital account and then we'll prepare the balance sheet of the firm. So let us start with the capital account and capital account. We start with by balance brought down. Who are the partners? Red, blue and green. Okay, now over here see what is the capital given of red. It is 1,60,000. Now what is the amount for blue? It is 1,40,000. Now the next entry is by revaluation, which is a profit which we have actually calculated, 12,500 for red and 7,500 for blue. The next entry will be by bank. This is the amount of money which green has brought in. If you remember, green had brought in 1,20,000. This concludes the capital account. Now we'll just do the totaling and see the balance. So over here you can see 1,72,500, over here 1,47,500 and over here 1,20,000. So let us go to the debit side and write to balance carried down, and 1,72,500 for the first partner, which is red, 1,47,500 for the second partner, and 1,20,000 for the third partner. So this is our capital balance. 1,72,500, 1,47,500, 1,20,000. If you know, the name of the three partners are red, blue and green. Now, after preparing the capital account, let us now move on to the balance sheet. Is it clear? So we'll move on to the balance sheet. As at, and we start with the first asset, which we have land and building, and it is given to us as 1,50,000, but there has been an appreciation of 30,000. So we'll write that land and building, inner column 1,50,000, add appreciation 30,000, 1,80,000. Next we have plant and machinery, and if you see very carefully, the value is 80,000 and there was a depreciation of 10%, and that is 8,000. We subtract that and we get 72,000 in the outer column. If you remember, we had got a depreciation of the plant and machinery, so we have subtracted that and got 72,000. Then there is furniture, which has no revaluation. The value of furniture is 30,000 and it is without any revaluation. After this furniture, the next asset which we have is stock, and the value of stock is 45,000. Next we have debtors, and there is an adjustment for debtors. The value of debtors is 25,000 and there is a bad debt of 3,000. So value of debtors is 25,000 less bad debt, and that value is 3,000. Outer column 22,000, and last we have the bank figure. Now if you see the balance sheet, the balance of bank is basically given to us as 20,000 and green has brought in 1,20,000. So we are showing that in a bracket 1,20,000 plus 20,000. So that gives us 1,40,000. So this concludes the asset side of the balance sheet. We'll do the totaling afterwards. Let us complete with the liability side of the balance sheet, where we already have the capital balances of three partners, red, blue and green, and we also have creditors and bills payable as the other liabilities. So let us start over here. First we are writing capital account, and we have there red, we have blue, and we also have green. So red we have 1,72,500, we have blue 1,47,500, and finally we have green 1,20,000. Now if we add 1,72,500 plus 1,47,500 plus 1,20,000, we add these three, so we are getting a total of 4,40,000. We are getting a total of 4,40,000. Now after that we have creditors, and if you remember, both creditors and bills payable have got adjustment. The value of creditors has decreased by 3,000 and the value of bills payable have increased by 2,000. What is the value of creditors given over here? 35,000, and you can see over here it has decreased by 3,000. So let's decrease, don't write depreciation over here, it is decreased 32,000. And next we have bills payable, and the value of bills payable given in the question was 15,000, and you can see over here the value of bills payable has gone up by 2,000. So we'll write add increase 2,000, 17,000. Please understand this very carefully. For current assets or liabilities, we will not use the word depreciation or appreciation. We'll use the word increase or decrease. and I have written that over here. Now that concludes the balance sheet. Now after doing all the postings of the balance sheet, we'll now add the liability side and the asset side and see if the balance sheet tallies. So we have 4,40,000 plus 32,000, that gives us 4,72,000. 4,72,000 plus 17,000, that gives us 4,89,000. So the liability side of the balance sheet is 4,89,000. Let us now see what is the asset side of the balance sheet. We have over there 1,80,000 plus 72,000, that gives us 2,52,000. 2,52,000 plus 30,000 plus 45,000 plus 22,000 gives us 3,49,000. 3,49,000 plus 1,40,000 is 4,89,000. So the balance sheet tallies at 4,89,000. Now we have just completed with this sum in which we were given revaluation. In this question there was no information about any goodwill brought in by the new partner, and that is the reason why no sacrificing ratio has been calculated. The question had very clearly told us to prepare the revaluation account, capital account and the balance sheet, which we have done. Keep watching my channel, don't miss any of my lectures, and if you have not yet subscribed my channel, please do subscribe it and press the bell icon so that you don't miss any of the lectures.